In the year 1999, my father bought his first health insurance policy. I remember he telling people around him how he has bought this bumper cover. People around him were impressed too. The cover was for rupees 2 lakhs. Cut to 2009 when I started looking for a personal cover for myself. Then 10 lakhs looked like a really big cover. 1 crore covers, they had just started becoming available, but they were positioned to be sold to the ultra rich. Cut to 2025 and 1 crore covers may still look high, but is no more shocking. The key question here is, will 1 crore be fine 20 years from now when I will be 60 plus years old? In this video, we will go deep to understand why this is happening, what is the future going to be, and most importantly, what should we do to act upon these insights. First, let's understand why healthcare is getting so expensive. Number one, we solely depend on private healthcare. Over multiple governments, India has never shown aggressive inclination to build public healthcare infrastructure, basically public hospitals. India's healthcare spending is just 2.1% of the GDP, one of the lowest globally compared to most other countries. This seems to directly impact the infrastructure and the quality of government hospitals around us. Of course, the government is doing its bit to cover the poor through insurance schemes and infrastructure, but the middle class and the upper middle class who want the quality of healthcare do not seem to be fine with using these hospitals and hence are left to deal with private hospitals and the cost. And as you would know, the costs in private hospitals are zooming, especially the bigger hospitals. Private hospitals are unfortunately, likely to always remain expensive. Why? Because demand for quality healthcare will remain way higher than supply. Just look at the demand for a top hospital in your area. Everyone you know throngs to those very same hospitals when it comes to major treatments. Some data will also help you understand the situation better. India has 1 doctor for every 1,500 people and just 1 hospital bed for every 1,000 people, far below WHO's recommended standard. Hence, the cost of healthcare is growing and is not likely to go down very soon. No wonder, as per multiple reports, healthcare inflation in India is around 14%. Matters may in fact get even worse, given that there are multiple foreign private equity players entering the market who will corporatize and hence even push costs further up. I really hope I am wrong, but it somehow looks like we are going the American way of capitalist healthcare, hospitals charging a bomb and almost non-existent government hospitals. But wait, we have just started, picture abhi baki hai. Number 2, the complexity of health conditions is increasing. The incidence of serious diseases and major surgeries have increased significantly. Given our lifestyle, the stress and the pollution people are exposed to, we are at the highest risk of lifestyle diseases ever. If you look at data, 2 things have really zoomed. 1, the frequency, the number of times people are visiting the hospital has increased. 2, the average bill amount per hospitalization again has increased. Let's first talk about frequency. Now my 80-year-old Bua, my aunt, maximum needed a cataract operation or was recommended a knee replacement surgery she never went for. She has only age-related disorders, no lifestyle diseases whatsoever. If you look today, people in their 30s are getting diseases that a decade ago were affecting only 40-year-old and so on. Similarly, people in their late 40s, early 50s are going through cardiac surgeries today, which earlier was something that people at late 50s and 60s were heard to go through. Yes, I know these are anecdotes, so let's look at some data. As per National Cancer Registry program, the incidence of cancer has grown by 42% from 2010 to 2020. As per Indian Heart Journal, there has been a 300% rise in heart surgeries. With this data, it is clear the number of hospitalizations today's 30-year-old will require in 20 years will be way more than what our parents required and way more than what our grandparents even imagined. The sheer probability of people being hospitalized thanks to lifestyle stress pollution seems to have grown by 3 to 4x. Now we've understood the frequency of hospitalization. Now let's understand the costs and how they have increased. An appendix surgery costed 70k in 2015. Now it costs 1.5 lakhs. A cataract surgery costed 25k. Today it costs 60,000 rupees to a lakh. ICU per day cost in 2015 was 5k and now has reached 12,000 to 20,000. Reports from major hospitals have reported a 3x increase. Yes, a 3x increase in cost for cancer treatments and heart surgery costs. For instance, as per Indian Heart Journal, the cost of angioplasty, a cardiac surgery, has risen from 1.5 lakhs per procedure in 2010 to 3 to 7 lakhs per procedure in 2024. Number 3 that you need to understand very well is the impact of tail events. Now, tail events are nothing but worst case scenarios, and that's what you need to plan when you're doing risk management and planning insurance. You don't buy health insurance just for regular hospital visits. You buy it especially for things that go horribly wrong. That's exactly why you need to plan for worst case scenarios. Not just routine surgeries, but life-changing treatments that can drain everything you've saved so far. So let's understand what comes into your mind when you think of the worst case scenario in healthcare. The C word, yes, the unusual one-off health conditions like cancer that cannot be predicted and can cause severe disruption are called tail events. Now, there are 3 major reasons why a tail event can be financially disrupting. But wait, before I move forward, let me tell you a little bit about Beshak as a platform. We are India's only independent research-led community platform where you can connect to the best insurance experts who are armed with sophisticated research and technology. Okay, back to 3 reasons why tail events can cause a financial earthquake in our lives. Point number 1, the cost. Obviously, the cost of treatment of a tail event is usually very, very high. A liver transplant today in Mumbai can cost 30 to 40 lakh rupees. At 14% inflation, this will go to 1.5 crores in 20 years. Point number 2, no compromise decisions. Taking a step back, the reason why we need a higher cover is also because we Indians do not want to compromise over our family's care. I remember personally my father had a tumor the size of a golf ball right here inside his brain, and thankfully it was non-cancerous. But when we realized this, we started looking for the best surgeon in town without worrying about the cost. And believe me, we did have financial limitations. We are not poor, but we did have financial limitations. The more the complicated the surgery or the disease, the less we as a family are ready to compromise on the quality of care. For a major treatment, given the sensitivity involved, we are likely to go to the best cities, best hospitals, best doctor and not settle for anything else. And that will come for a cost. Point number 3, advancements in the treatments itself. Now the major treatments also see the most advanced research, thus introduction of the most advanced treatments. While advanced treatments bring in better quality healthcare, they will of course come with significantly higher costs. For instance, a cancer treatment earlier used to cost 1/5 of the current cost just before modern treatments were introduced. Immunotherapy today or targeted therapy costs 5 to 10 times the conventional chemotherapy. And of course, how can a conversation around random events end without talking about COVID? Remember, the lack of awareness about treatment, the lack of equipment led to hospitals over-treating, overcharging patients right, left and center. During COVID, per day ICU charges of 50,000 to 75,000, total bills of 15 lakhs to 20 lakhs were daily headlines. Tail events and their costs need to be factored beyond linear calculations to calculate the cover amount we would need. Okay, now that we know how healthcare costs are rising, let's do a quick back of the envelope calculation of the cover amount a family of 4 would need. Let's say today the cover needed without factoring any tail event is 5 lakhs. If you apply 10% inflation over this 5 lakhs, the cover a single person will need after 20 years is 24 lakhs. Now to account for tail events, I would say the cost of tail event would be around 15 lakhs. If your goal is to be safe against 90% of the hospital events, even 20 years from now, you will ideally need a target cover of 1 crore after factoring inflation. And if you are 2 adults in the family, then the floater you should take to ensure you both are adequately covered would be upward of 1.5 crores minimum. Note, we are not even factoring medical technology innovation that may come around. Right? Remember the example I gave some time back? How cancer costs went up by 5 to 10x just because chemotherapy was replaced with immunotherapy. And now for the most important part of this video. How and when do we plan to take such a large cover, and can we really afford it? First things first, if you're young, don't stress a lot. If you're less than 25, you can start small, say at 5 lakhs. Then as you grow older and are hovering around 30 years of age, before you or your spouse get any disease, should target moving to a 10 to 20 lakh base plan with a 80 to 90 lakh super topper plan. I know many who are beginners in health insurance would question the need to have such a large cover by the age of 30. The question can be, why can't I buy a larger cover later when I am say 40? Now the key thing to remember here when you make that remark is that upgrades in health insurance aren't available whenever you want them. As much as you and I would like to upgrade our covers as we grow, you need to find the right sweet spot age and pre-book your cover for old age before you have that disease or a claims history. Why? Because insurance companies block upgrades as soon as you have a chronic health condition or a history of a surgery. So as much as you would want to take a basic cover today and increase the coverage as you grow older, unfortunately, that's not how health insurance works. You will need to smartly factor the age by which you would like to upgrade to the cover you need in your old age, which is around 50 or above. We think that sweet spot is 30 years. That's the age where you're young, you're healthy, and you're also in most probability at the age when you can afford to buy that higher coverage for your old age. If you're under 30, this is your window to lock in that right cover before insurers block upgrades due to medical history. I would sincerely request you don't wait and upgrade your cover today.